Buenos dias. ¿Qué tal? Thank you for everybody to coming our workshop session. I'm Mikko Ohtamma, a co-founder of Trading Strategy, and we are a protocol for algorithmic trading on decentralized exchanges. And here we also have our own other co-founder, Mr. Teemu Saaristo. And if you have any questions afterwards, he's the guy who is doing all of our business development. All I can do is a Python code, so he takes care of all of the rest. And first, let's talk about trading a little bit. So is there anybody in the audience who doesn't know what algorithmic trading is yet? So please raise your hands. Okay, you are all experts. Maybe I can go home now. So algorithmic trading, or algo trading for short, is a form of trading where the machine is making all the decisions. So it's basically fully automated, or at least semi-automated, like old banks are still doing with scripts and Excel sheets. So it's half automated. There's always a old lady typing the numbers with the typing machine somewhere. But it can be also super fast, like high frequency trading, where latencies are under 1 microsecond on the stock markets nowadays. And it's the domain of Citadel and BlackRock and Renaissance and all of those guys who are making shit tons of money. And most of the trading in the public market is algo trading. So if you look the statistics there, it's from the Economic, and I think the other one is from Goldman Sachs. You can see that the share of the automated trading from all trading is going up all the time. And the reason is very simple, because machines are just better than humans. Like they don't have emotions, they just go and shoot, and they can work 24/7. And we are a DeFi company, and if anybody has ever tried to trade on DeFi, you have opened your MetaMask or Avalanche Core wallet, and you go to your crappy swap website and hope that it works. You know that it's not very professional yet. It's very ad hoc, and reason for that is that DeFi trading has very short history. So, like the whole concept has practically exists since 2020 summer. And our company's mission is to bring this kind of pro trading tools to DeFi, which usually means more automation, more risk management, and more analysis, so that the people who are doing trading, they would not get wrecked. So basically, there's some kind of idea that when you are about to press the button, you know what's going to happen and what are your chances that the number goes up. And how we accomplish this as a trading strategy is that we are providing 4 pieces to the puzzle. So the first one is the market data. So if you are trading on technical analysis or price action, you need to know what's the price was before and what is likely to be in the next phase. And usually on a TradFi markets, you have tools like a Trading View, where you can go and see, okay, this is how the price has been going up and down in the past. But for DeFi, we are doing it ourselves. So we are the source of the market data, and we have like 2.5 terabytes of market data you can download on your computer and see how it opens. The other one is developing the tools for traders. So if you are going to automate something, you need to have a tool to automate it. So we have what's called a backtesting framework, where you have Python scripts where you can write like, on these conditions you are going to buy, on these conditions you are going to sell. And that's very simple, but it can be super complicated as well. Like it says that here are 7,000 different assets, what I should buy today. And then the machine learning will tell you that these are the tokens that are going to go up. And today is going to be AVAX. Then we provide also trade execution, so how the actual trade happens. And as I said, it's in DeFi, it's a little bit complicated. On traditional markets, you have an API where you can say, buy this token, and then it just happens somewhere there, and it's settled three days later, the money has gone from your bank account. But on DeFi, it's much more complicated because the exchanges are direct to investors, there are no consumer protections and so on, so you need to go there and integrate it yourself, and we provide whatever tools you need for that. It's basically Docker containers, oracles, smart contracts, and so on that you can automate your trade execution easily. And the fourth piece is the funds management. So if you can easily trade for your own capital, but let's say that you are very successful. So soon your friends will ask like, hey, how can I give you money? How can you trade my money? And then managing the money of other people, you can do it today on chain. So there are multiple protocols for that. That's called like digital asset management protocols. Most famous and oldest one is Enzyme. Then you have D-Heads from Australia. You have Aspis. You have Velvet Finance, and a lot of these kind of vault protocols are now popping up. I mean, the DeFi markets are getting more liquidity, more complex, and there are more stuff to trade, and people want to trade. And institutionals are coming, so they want to have more tools, more security, and so on to make sure that their money is not gone there. And as a protocol trading strategy, we are not the market maker, or we are not doing high frequency trading. We are not doing market making for your token. So what we are focusing on is this kind of old stock market and centralized exchange-based trading strategies that are usually market takers. So your goal is to buy low and sell high, and that's only thing you need to do, and your success rate needs to be more than 51%, and you are making money. And there exist very simple tools like that are based on technical indicators, or you can do very complex stuff like AI and machine learning to analyze the markets and try to find the signals on the tokens that you think have a statistical chance to go up. And most of the times you might be incorrect, but it's enough that you win some bets and you win those big, and that's how you are profitable. And as I said, we have a Python-based backtesting and live execution engine ready to go today. We have a lot of data on our website already, so you can download it. We offer it for free. We have 1.5 million trading pairs, mostly all the shitcoins in the world. So we professionally call them small cap tokens. And we are also offering not just like trading on DEXs, but we are offering lending protocols like Aave, and you can use these lending protocols to build short positions. So on a centralized exchanges, you go to what's usually called a perpetual swap. So you take a leverage and it goes like 10x or up or 10x down. But that's usually very capital inefficient way to do it, because you are paying very high fee for maintaining your position as is in the form of interest. And using these DeFi lending protocols like Aave, Compound, and Euler, building leverage positions is much more capital efficient because the fees will be lower, which means you are going to make more money on your trades. We are offering a set of technical indicators out of the box. There's like 150 of them. You can use any Python library with our stuff, so you can just go there and everything is like works out of the box. And two ways, if you want to do algo trading, two ways for you to make money is what the first one is called a proprietary trader or a private trader, that you are just trading your own money. But as I said earlier, we are also offering this kind of open strategies that you can accept traders or investors from other people, and that way you can collect more capital for a trading strategy, and then you can monetize it through success fees or management fees. And it depends which one you want to do. So if you are a hedge fund or if you are already wealthy, you probably want to trade your own capital and you don't want to disclose your strategies so they can stay private. But if you are a young guy, if you come from developing nations, you are very good in math. Let's say that you come from an Indian university and you are very good in math and you know how to trade, but you don't have capital. Then you can open your strategy and other people can give you the money and you can profit together. And now I will show you how it works. So giving the preview. So what in this workshop we show for you is that we have an existing trading strategy. It's on the most popular platform on the world called tradingview.com. And here you can see the price action of AVAX token that has been on a Coinbase since October 21, and it goes all the way to the around October 22. So we have a 1 year of history for the backtesting. And wait, it's not here. Right. Maybe I need to go to my editor. And on a trading view, you are using a programming language called PineScript, which is specialized for trading. So you are defining a different kind of indicators. And in this strategy, there are two main indicators. One is called RSI, or Relative Strength Index, which tells you how good the market looks like. Is it overbought or oversold? And the other one is called Bollinger Bands. So it's basically the moving average of the price, and then you have an upper and lower band over that average. And based on these two things you can calculate from the price, you can even calculate it yourself. The rule of the trade here is that if the price, the closing price crosses the upper Bollinger Band and the RSI is over some threshold, then we buy. And if the price goes to below the moving average, then we close our existing position, we sell. And based on these kind of very simple rules, our hypothesis on the market is that there are a lot of what's called breakouts, so that the price starts to go up. So it crosses the upper Bollinger Band, and then it just goes up and up and up until it settles down to a new level. And the trick is to hunt those breakouts, so that you can utilize the momentum. So you buy it when it's about to start to go up, and when it reaches the level, you sell. And then we have our own framework. So that's from the trading view. And in a Python world, we use a tool called Jupyter Notebooks for doing all kind of data research. Is there anybody in the audience who have ever used Jupyter Notebooks? Please raise your hands. All right. I like Python people. They are the best people in the world. After the Avalanche people. So Python Notebooks is the tool we are using, and this is the Python codes we are doing here. So it defines like the candles we are trading. We are doing 4-hour candles. Then we have conditions like what kind of stop losses we are doing. We give it the trading pair. We are using AVA USDC pair that's trading on a Trader Joe. That's one of the most popular dexes on Avalanche. We give it 5,000 cash to start with. We tell that it can use 50% of your cash for its buy and sell. And then we give the parameters for the Bollinger Bands and Relative Strength Index. And then we give it a period of the start and end when to a backtest. and then what stop loss to use. And then we have a Python code, but here basically there's in the end, after this all kind of setup and ceremony, you end up with the same code that you would have in a PineScript. So ask the framework to calculate the polynomial bands for you, upper, lower, and middle. And here is the same logic. So if there's no position open, if we cross the upper band and the market is strong enough, then open a position. And if we are going down of the moving average, then close the position again. And then we have some kind of visualization. So how we want to visualize these technical indicators in our backtest. And I don't run this now because I'm unsure about the internet, but I have already run it. So it was running here and it completed the backtest in 4 seconds. That's pretty fast. And then we can analyze based on the results. We have this kind of massive data dump coming out, which is all the trades. We can analyze, okay, what's actually happened here. And let's start with the good parts. So here is what we call a benchmark. So, okay, you have a trading strategy and you need to know how good it is. And here we are benchmarking our strategy to the just by holding cash. So what if all of your money would have been in a USDC, or if you would put all of your money to buying and holding Avalanche token. And here the dark green is our strategy and the light green is buy and hold Avalanche token. And you can see that last year it was not a very good time to hold Avalanche token. So our strategy, even if it was bear market going down, it managed to first it managed to reserve the cash. It was not making losses, which is the first rule of trading, that don't lose the money. And the second rule is that hope that you can make some profit, and it made a tiny profit here. And here you can see the let me see if I can put that down. Here you can see the technical visualization. So the green spots are where we had a profitable position, and the red spots are where we lost money. So that you can see that we had a couple of the green ones where it was longer. So here we can see that we were open for 3 days. So we managed to capture this short upward trend. And you can see that this indicator is the relative strength index. So you can see that this is our threshold in 60. So when we peak above, we open the position and we hold it and then exit it for the profit. But we had also, if we go to the individual trades, we can see that we made a lot of small trades that lost little bit money. So you can see that the losses are around 2%. What's the stop loss value? So there were a lot of what we call false breakouts. So it looks like it starts to go up, but it didn't. It actually started to go down. And there where we manage our risk with stop loss that never lose than more than 2% of your capital on its position. And then we have a lot of all kind of other stats you can and the diagrams you can do to analyze your strategy. So you can see different best day, weekly, monthly, year. You can see what were the best months. You can see what was the equity curve and drawdown, like what's the maximum amount of money you would have lost if you had been trading, and it's around minus 5%, which is okay. It's not very good. And there you can see how much we made profit, and here we can see the spikes here is the it happens because it's not closing the position right at the middle. It starts to go down and it closes and it then settles on a new level. And it's not very good strategy. It's just for the example. It's like 5 lines of Python code, and we have a better examples in the same repo you can look. And then we have all kind of statistics we calculate out of this. So it says this is the money at the start, this is the money at the end, this is the trading volume. So if we have any DEXs in the audience, this kind of strategies generate tons of trading volume, and it's market taker volume, so it's good for everybody. You can see all kind of success rates, and what else we have? All kind of hedge fund risk metrics. You can analyze this strategy against other kind of trading or investments. And we have all of the code we have here is an open source, so it's on a GitHub. So if you are interested of this kind of stuff, you can go to the GitHub repo, and basically it's a Python. So if you know how to run a Jupyter notebook, you can run this code on your local computer, and you can repeat the results, and you can even start trading. So that's there. We have also a Discord community, so we have a couple of algo traders and ourselves who can help you to get started. And on the GitHub repo, you find more advanced examples of these kind of strategies. So we have strategies that trade multiple pairs. We have grid search that tries to find optimal parameters. We use different time frames, like 1 hour, 1 day, 4 hours, and you can see how these kind of tweaks, how they affect the profit and so on. And that's it. And now we have tons of time for the questions. So yeah, there's a microphone, so you can.
What type of indicators are available for all the TAs on your repo? Is it only the Bollinger Band, or?
Basically we have everything in the world. That's the short answer. So we have more than 150, and we are using 2 Python packages called Pandas TA, and the other one is TA-lib. So you can find any indicator ever invented.
So basically, it's possible to tailor-made any type of strategy using this.
Yes.
Great, thanks.
Okay. Next question. Yes,
thank you for the presentation. The code is open source on GitHub. If we are building a DeFi protocol that we think is useful, can we make a PR ourselves to add it to the possible underlying protocols to use to, for instance, long or short certain assets?
Yes. And to clarify the question, so our business model is a profit share. So no matter if you are running proprietary strategies or open strategies, we try to make the fees on a profit share.
Yeah, it was not really on the strategies, but you mentioned, for instance, that you can use Ava or earlier to short. If we also build a DeFi protocol ourselves that we think can be useful to long or short certain assets in a better way than Ava, let's say.
Yeah.
Can we also?
We just integrate your stuff, and how it works is that for the low-level integration, how we interact with different protocols, we have a Python package that has a very boring name, Web3 Ethereum DeFi, which explains what it does. And it has integrations for different protocols. So it gives you the high level of Python primitives you can use to interact, and then you can use those in your strategies.
Hello, Seven Don from Vector. The presentation's been very great. I really like the trading view and the technical indicators. My question is that you talked about the community where you try to have multiple people sharing strategies, trying to build upon examples such as what you showed with the Python example. My question is, how successful are people in the sense that technical analysis can be sometimes a bit messy, time series analysis in the field of AI, especially for everything trading related, is more or less effective. is it still effective in crypto in the sense that the market is less effective than for instance, trading action and such? Or is it only the one who will develop the more advanced strategy who will earn from this kind of strategy?
Yeah. So if I understand the question correctly, is like if the strategies work and is the market inefficient? Yeah.
Yes, and if so, are the effective strategies only the more advanced ones, or are people making profit even with Bollinger Bands?
Yeah, I mean, yeah. The short answer is that I would say it's quite easy to make money. So even the simplest tricks work. And other reason for it is that if we go to here on a README, we compare our TradingView to a Coinbase, which was based on TradingView. The trick is that these strategies are very sensitive to trading fees. And Coinbase taker fee is 0.5%, and the TradingView is 0.2. So TradingView is like 2.5 times cheaper, which means that you are making tons of more profit trading on DEXs, and you don't need to be that good because the fees are so low that you can make money even your eyes closed.
Okay, thanks.
Yeah, more questions? There's one in the front.
Hey, thanks for a very informative speech. And hey, so does the model also like calculate the risk of like leverage? Like, what if it's like 100x leverage, and how can it exceed, like, you know, even when you do like stop loss at like 2%,
yeah,
it still go over 2%, right?
Yeah, that's correct. So there is the how it works is that the DEXs, they don't have a native stop loss order. So we are actually executing the stop loss ourselves. So we are monitoring the price, and when the price dips below the certain level, we try to close the position as soon as possible. So we run to the blockchain and like transaction, 9999 gas, hope it closes. And that's how it works for centralized exchanges as well. And it's usually the execution is always worse than the theoretical value because the market moves faster than your transaction. But we are still kind of, I would say we can stay within a tolerance. And it all, as you said, comes to the risk profile. Like if you are trading very high leverage positions, you are probably doing with very small amount of capital, so that even if it's completely wiped out, you don't worry about that. And that's what professional traders are also doing on crypto exchanges, because they don't trust Binance. So they are trading on a leverage with a small amount of money, so that even if the exchange goes kaput, they only lose whatever capital there's in deposits.
Okay, thanks.
Hello, we are from Fiverblock from Vietnam, and I have a question. How you compare to Hummingbot? You are familiar with that?
Yes, I'm very familiar with the Hummingbot, and the Hummingbot has been designed for market making. So Hummingbot is mostly a high frequency strategies, so they are now adding some directional or slow strategies as well. But it has been originally designed for market making, and we are more for market taker kind of strategies. So we are trading against those people who are running Hummingbots.
So can we build different gateway, like different DEX, different chain on with yours?
Yes, and we are like a native DEX native, so we don't need to gateway. So this Python package is directly interacting with the smart contracts. So there's nothing between strategy and the blockchain. So it's like very direct.
Okay, thank you very much.
Well, I realize I've missed quite a bit because I arrived in the middle. why arbitrage are not supported?
We could support it, so we can support it, but it's just like we don't want to, because most of the arbitrage is done by MEV bots today, and we are not in that business. So we are choosing to go for different direction, because I think it's healthier for the markets, and you need to bring some kind of market taker volume as well. It just can't be LPs and arbitrage bots on the DEXs. All right, I think we are done with the time. So thank you for your time, and it was a pleasure to see you here.